Thank you so much for the in-depth interview, or excuse me, introduction. I'm really thrilled to be able to present the story to everyone on the call. With that said, I'm gonna share the presentation and let's get started. Just as a matter of housekeeping, take a quick look at the safe harbor, and I'll jump into it. As Stephen said, we're BTCS currently provides data analytic tools, and we're generating revenue by securing next generation blockchain infrastructure. Just by way of background, we were the first U.S. public company to be public back in 2014. We started mining Bitcoin back then. We pivoted out of that, and in 2017 we became the first company to implement a digital asset treasury strategy, way before MicroStrategy. And around that time, I actually helped Marathon get started in Bitcoin mining as we moved away and started targeting more exciting ventures within the blockchain industry. And so in 2021, we started basically securing the next generation proof of stake blockchain, such as Ethereum and Solana, where we think the real future of the technology is. And as Stephen mentioned, we're actually paying a dividend to all of our shareholders of record as of tomorrow. So there's still time to get that, at least in cash. It's probably a little bit late to get it in Bitcoin. But we were the first US public company, or I think public company overall, to pay a dividend in crypto. So that's been pretty exciting. Just some kind of key financial highlights. As of the year end, we had just under 38 million in cash in crypto. We did about 1.2 million in revenue with about an 80% gross margin. We raised substantial amount of capital for our size, about 16 million at about just over $8 a share. Tremendous growth in the value of our digital assets year over year. We have no debt, very low float, and a high insider ownership percentage of over 40%. So we have the best interest of our shareholders, as the largest shareholders, always in mind. As far as ways you can get exposure to crypto, obviously you can directly own it, which is great. I encourage everyone to do that. It's part of gaining financial freedom, but it is hard for some institutions. And I think we provide a very unique opportunity to get exposure to not only cryptocurrencies, but to the blockchains in general. Obviously, you can invest in private companies. That comes with a different risk profile. As far as public companies, I think this is the real meat and potatoes where we're focused. So if you want to exposure to Bitcoin and first generation blockchains like Bitcoin, there are tons of options. There's 19 Bitcoin miners to choose from, and they'll all pitch you on who has the lowest cost of energy. Are they green? Are they not? There's a couple exchanges which are believe good businesses, and there's a bunch on the OTC markets. If you're focused on, or you have an interest in blockchains overall, and you believe in Web 3.0 or NFTs or these other things that I'll kind of talk about in more detail, and you want exposure to that, what we believe to be the next generation of blockchains, there are very few options. As far as on the NASDAQ, there's really us. And then Coinbase, though they're primarily an exchange, though they do provide some exposure to these other avenues as well. Unless you want to go up to Canada, and there's a lot more companies that are doing other business lines apart from mining Bitcoin. So there's about 4 options up there on the NEO. With that said, I'll kind of dig into the industry. I think it's really important to give just a kind of the basic foundation of what we're doing and why we think it's important. So, obviously the internet's huge, right? The world wouldn't be what it is today if we didn't have the internet. But all the internet really does is allow for the digitization and transfer of information globally. And that's amazing. You can send an email, to someone in Japan. You can share a video. There's a tremendous amount you can do with it. You can share your GPS coordinates for, let's say, Uber. But what the internet did not allow for until now was the movement of digital assets from one person to another without a trusted third party. If you send someone, a PDF of some document, you still have a copy of it. The actual ownership of that has not moved. That could be, title to a house, or it could be a movie theater ticket. Blockchains allow for the digitization and proliferation of assets without an intermediary, and that's huge. And to understand how that works, I think is key. So for instance, a bank doesn't have a distributed ledger. It's just a centralized, intermediary, right? So if you have money at, let's say, Chase Bank, they just keep a database of who owns what. You don't actually have a pile of cash in a safe that's yours, and they maintain that ledger, right? They're the trusted third party. It could be, in the case of a stock, it's a securities exchange, etc. With a blockchain-based system, you actually have a distributed ledger where each node has a full copy of the every single transaction that's ever occurred. And those transactions need to be synchronized across the network, which is done by validator nodes. And each validator node has a full copy of every single transaction, i.e. the blockchain, and can add new transactions to the blockchain. So the way that would work is if you want to send a Bitcoin from one person to another, that would get broadcast to the network. The network of validators or miners in this case would verify that as a valid transaction and it would get grouped with other transactions. Think of it as like the postman with a big bag of mail, and that block would get written to the blockchain permanently, and all of the nodes would then sync up with that transaction and verify it as accurate and true. And the major blockchains, none of them have been hacked to date. So it's a very robust system that allows for the movement of assets globally without a trusted third party. And that is huge, right? When you look at the potential market size, right? First generation Bitcoin, blockchains such as Bitcoin, are an amazing proof of concept, right? It shows that you can digitize an asset, have a way to keep track of that without a trusted third party, and it's a great store of value. And Bitcoin's not a great currency because it's too volatile and the transaction speeds are too slow, and you can't build on top of it, right? It's just a digital asset. Next generation blockchains are built on that foundation that Bitcoin's blockchain laid, and it is tremendous what can be done, right? NFTs are an amazing use case, and this is often referred to as Web 3.0, the internet of tomorrow. And so if the internet today is worth, let's call it 30 trillion, and I think it's probably much higher. I mean, I can't imagine the world without Uber or Netflix or Google or Amazon, which would all go away without the internet. If it's a $30 trillion market and all it does is move information, how big a market opportunity could blockchains where you can digitize and move assets, how big is that going to be over the next 10, 20 years? And we think it's going to be huge compared to what a Bitcoin could do, right? I mean, Bitcoin could be effectively similar to gold. So that's where the company focus has been, is next generation blockchains. And again, we're one of the few ways you can get exposure to that in the public markets. Kind of digging a little bit deeper in this, some of the use cases for Web 3.0 or these next generation blockchains are, NFTs. It's an amazing use case where artists can monetize their digital art, and they can get paid commissions on subsequent trades in the future. Decentralized finance, where you can have borrowing and lending without an intermediary. That's great for microfinance. And obviously the metaverse, you've heard Facebook change their name to Meta, right? And they believe the future is going to be in the metaverse. But transactions that occur in the metaverse are going to be digital transactions and are going to need to be recorded. And blockchains provide that baseline infrastructure on which that can be built. So that is, in our mind, just really exciting. I kind of touched on this, a little bit in terms of what can be done, right? Distributed finance or decentralized finance, NFTs, but it could also be tickets to, a game, right? If you if you buy a ticket to the Super Bowl and you want to resell that, maybe you're going to StubHub, and it's a very broken market, right? With a blockchain, you could digitize a ticket, sell it on, have it traded on a blockchain or be listed on a blockchain, and it could transfer, 1,000 million times across various people. And if you bought that ticket at the end, when you show up to the game and they scan your ticket in, that NFT, it would be a valid ticket. And that's obviously not occurring yet, but the use cases are endless, right? Ticketing is one, and that could be all sorts of ticketing, not just, sporting events, but it also could span to voting, right? There's no reason we should be voting, and having hanging chads and these other issues. It should just be, authenticating on your phone and recorded pseudonymously on a blockchain. And as far as what BTCS do really to drive deep, and this is the the value proposition. So we secure the next generation blockchains that power NFTs, DeFi, the metaverse, etc. And we earn revenue by running the validator nodes. In addition to that, we're building a digital asset platform, basically a one-stop shop where users can come see all of their exchange data in one place, as well as delegate their tokens and participate in this consensus mechanism and earn an APY on their money. And so thinking about how that works, most of the next generation blockchains are proof of stake, which is a little different than Bitcoin mining, right? In that in order to validate transactions, you put some capital at risk. You lock up your capital into a node, and then you're given the right to validate transactions. And if you try to cheat the system, you're penalized. And so that's what we do. We run the nodes, and we've locked up our capital, and we're earning a reward for validating transactions. Just like a Bitcoin miner buys a piece of hardware that they then use to secure Bitcoin's blockchain, we're effectively doing it via staking. So we stake our cryptocurrency and we run the validator nodes. And what it really allows for when we get into delegated proof of stake is, because we're running the nodes, others can come to our nodes when we open our platform, stake their tokens with us, and we will get a fee of a part of their reward. So that's typically 5 to 10% we would get of what they earn. So think about an asset. If you had, if you own a house and you want to generate, a yield on that house, you could put it up on Airbnb, and you're getting a return on your investment. So if you own crypto and you're doing nothing with it, whether that's Cosmos or some of the others we're focused on, you could delegate it to our pools. You don't have to do any of the hard work. We've done all of the, we've got the nodes up and running 24/7. We're doing all the technical work. You simply stake it to our node, and you would earn, depending on the blockchain, you could earn anywhere from 5 to 20 or 30% APY on that token, net of our fee of 5 to 10%. So that's a highly scalable business model, and it's kind of the core focus of what we're building. And this kind of model, this slide really shows the difference between, let's say, proof of work, i.e. Bitcoin mining, and what we're focused on of delegated proof of stake. So apart from just the value proposition of these next generation blockchains compared to Bitcoin, right? You can actually build stuff on them that's going to transform the world. There's a very profitable business model for providing that infrastructure, just like a Bitcoin miner does. The difference is, while there's a lot of Bitcoin miners you can invest in the public markets, at the end of a couple of years, they all end up with worthless equipment, right? All their machines are going to break at some point. They're a depreciating asset, whereas all of our assets are staked onto the nodes, and there is no end of life, right? So if Ethereum goes up at the end of 2 years, we don't have a worthless machine. We still own the Ethereum, and it could have appreciated in value. Not to mention with some of these other blockchains where we have the delegated proof of stake and we earn a fee. So that's really what we're going after as far as a business model, and we've proven it out in 2021 in terms of our revenue and gross margin. So very excited for those results. As far as our digital asset holdings, the majority of our digital assets are focused on proof of stake blockchains. We do own some legacy, Bitcoin, and we've just had tremendous growth over the last several quarters in terms of the value of our cryptocurrencies. The one thing I would note is, if you're reading our financial statements, we carry our cryptocurrencies at the lowest price they've ever been. So, and we never mark them up, even if the price goes up. But if it goes down below our carrying value, we're going to mark it down. So you'll see it in our annual report that we filed a few days ago. It is only 12.3 million compared to the 36.4 at the quarter end or year end. So as far as the blockchains we secure, we're really focused on the next generation blockchains. We've kind of moved beyond Bitcoin. We're focused on Ethereum and Cosmos, Avalanche, Solana. I don't know if you've heard of these tokens. We do have a description and links on our website as to where you can learn more and why they're exciting. But these are the tokens that we believe have the ability to really change how people interact online. As far as the platform, our integrated platform, this is kind of a screenshot of kind of illustrating what it does, but you could create an account with us, connect multiple exchanges. We're also working to allow for the integration of decentralized exchanges, as well as our staking pool. So you basically can come have a portal where it's you can see all of your digital assets in one place and track your earnings and yield, and connect that to our connect your crypto to our nodes. And so here's just some screenshots of the current platform, and you can see here some other screenshots of the platform that is currently under development. As far as the company and our peers, they're kind of two sets of peers. One is the first generation Bitcoin miners, which is a business that we were actually the first US public company to do back in 2014. We helped Marathon get started in 2017, and they traded a very high value just based on their cash and crypto, right? The next generation blockchain companies such as tokens.com and Neptune, they're both Canadian listed, are trading at an average of 2 times, and we're sitting here on the NASDAQ at about a 1.1 times. And unlike some of the next generation blockchain ones that we noted here in Canada, we actually have IP. We're running the validator nodes. Both those companies, Tokens and Neptune, are staking, but they don't actually run their own validator nodes, and they don't have the IP to do it. Like Tokens could theoretically stake with us as opposed to using Coinbase custody. So from a value proposition standpoint, the company believes we're relatively undervalued, considering we're trading, just above cash and crypto, and there's no real, I guess the market isn't placing or doesn't really understand the value proposition to what we're doing in terms of what we've built and the scalability of our model. As far as the team, Michael and myself, Michael Handerhan, that is, been with the company since 2013. We recently added Michael Provoznik as the CFO, and Manesh, who was doing work for us for about 9 months prior to joining the team as the CTO. So we're really excited to have a broadened team. As far as the independent directors, we just have a great team. We hit 3 pillars: finance, technical, and legal. So David has been CFO of a NASDAQ public company in the past. Charlie's created Litecoin, which is just phenomenal, as well as being a former engineer at Coinbase. I think he was one of the 5th or 6th employee there. And Carol is very well recognized within the legal community for both money transmission, cryptocurrencies, and banking. And that's just an exceptional resource to have, especially considering the legal framework in which cryptocurrencies in blockchains companies have to operate. So that really sums it up.